Welcome back. Time now for a look at business with Kris McCusker, City News business editor. Happy St. Patrick's Day, Kris. How you doing?
Yes, I'm good. How are you? It's Friday.
Friday?
Yeah.
Oh, I know. St. Patty's Day on a Friday. That's the best day for it. Everyone getting ready to just tie one on in a business sense. All right, we're talking about luck here on St. Patty's Day. Let's keep the theme going here through business. Oil doesn't seem so lucky this week.
No, not so much. Oil is actually on track for its worst week so far this year, Sid. Well, I mean, that's an interesting definition. It's on track for its biggest weekly decline because whether it's good or bad that oil is dropping depends on your perspective. It's looking at a pullback this week of about 10%, bouncing off a roughly 15-month low this morning. Just a modest advance, though. And the banking turmoil we have seen this week is part of the story, although some say it's a little bit overdone. Some expecting that maybe OPEC would make a move in production in order to offset the damage we have seen this week. But for now, the cartel is slated to meet on April the 3rd, and it did forecast a modest surplus in the second quarter. Now, we did see a drop at the gas pumps last night, 4 cents, and I suspect, Sid, that we're going to see another one tomorrow. We'll hear from our friends at Enpro, I guess, between 8 and 9 o'clock this morning.
Definitely worth watching, Kris. Also worth watching, another U.S. bank on this Thanksgiving also seems to be a little unlucky.
Yeah, so we're talking about First Republic Bank. A lifeline is being thrown to that regional bank thanks to several big U.S. lenders. And we're talking about a $30 billion lifeline, although sentiment around First Republic Bank still seems to be somewhat fragile. The stock is down in pre-market trade, and that stock is actually on track for its worst week ever, a drop of about 60%. Now, Pershing Square's Bill Ackman said in a tweet that spreading risk of financial contagion to achieve a false sense of confidence in the lender is a bad policy, so not everyone thinking this is a great idea. First Republic's been struggling really since we learned about the collapse of Silicon Valley Bank and Signature Bank. There have been worries about the financial health of Credit Suisse as well, and U.S. listed shares in Credit Suisse also in the red this morning. Now, banking stocks globally have had a really rough week. The NASDAQ, though, sort of one of the bright spots this week. It's looking at its best week since November, up by a little more than 5% going into today.
So many holes in that bank, Kris. It's more like Credit Suisse cheese.
You could say that. You could say that.
Not my best. Finally, it's St. Patrick's Day. Green is top of mind. Could a lot of green be going back into the housing market soon? Well,
it would seem so, at least according to a survey. And this is from Royal LePage. And it shows that more than a quarter of Canadians who put their home purchase plans on hold over the last year due to those rising interest rates will resume their search this spring. So the survey found about 24% of potential home buyers were in the market for a new home this past year. 63% of them opted to put those plans on hold. More than a third of respondents who put their plans on hold say they will move forward with buying, but only if the central bank maintains the current interest rate for several consecutive months. So the Bank of Canada held interest rates at 4.5% at its last meeting earlier this month. The next meeting is set for April the 12th. And a big part of that decision on April the 12th will be the latest read on inflation, which we get, Sid, next Tuesday.
Kris, the thought of interest rates holding steady for a prolonged period of time, it excites us all. But based on what you're seeing here, I'm not looking for a hard and fast prediction, but how likely is that?
It's really hard to say. The Fed is set to make an interest rate announcement in the U.S. next week, and it's sort of evenly split between a quarter-point hike or doing nothing. And the problem, if the Fed does hike, then our dollar gets, clobbered. So the bank is going to be looking at all of that for the next meeting in April. Right now, it really remains to be seen. It's possible, but I don't know how likely.
Business editor Kris McCusker from City News. Kris, we are lucky to have you. Have a good day.
Thank you. Have a great weekend.
Take care.